Welcome to TalkTickers. We're your source for getting straight to what matters in earnings calls.
Cutting through that noise.
Exactly. Today, we're taking a deep dive into Omni-Lite Industries' first quarter 2025 earnings call.
Yep.
Our mission, like always, is to pull out the key moments, management's insights, and really help you understand their performance without drowning in the numbers.
And I think the big question today maybe is whether these Q1 numbers, which look kind of steady, might be hiding a more significant strategic shift, especially around defense electronics.
That's a great way to frame it. Omnite's Q1 results, yeah, they look mixed, but generally stable. Some clear strengths, but also, areas to watch.
Right. So maybe let's start with just a quick snapshot, the key numbers that jumped out.
Absolutely. So for Q1 2025, Omni reported revenue of $3.3 million.
Okay.
And it's pretty clear that was mainly driven by really strong production of their aerospace fastener components.
Right. And profitability. Adjusted EBITDA, which, we always like as a cleaner measure of core operations.
Yeah, that came in at $48,000. Mm-hmm. It's interesting. It's actually up from Q4 2024 sequentially.
But down compared to Q1 last year.
Exactly. Down compared to Q1 2024.
Okay. But beyond just the top line and EBITDA, they had some pretty strong demand signals, didn't they?
They did. Bookings for the quarter were strong, $5.7 million.
Wow, okay.
Which pushed their backlog up to $7.1 million heading into Q2.
That's significant. That gives them really good visibility, some stability moving forward.
And you got to talk about the cash position. Yep. That's definitely a highlight.
Mm-hmm.
They finished the quarter with $3.1 million in cash. And impressively, zero debt.
Zero debt. That's always good to see.
Right. And that cash balance is up a solid $2 million compared to Q1 last year. Shows really good financial discipline.
Definitely. And they mentioned positive adjusted free cash flow, too.
Yeah, about $341,000 for the quarter. So the business is, generating cash after covering its operations and investments. It paints a picture of a company on, very solid footing financially.
For sure. And that solid balance sheet, it's not just a number, right?
Yeah.
It supports everything else, their strategy, future investments.
Exactly.
The real story here, I think, isn't just those top-level numbers. It's when you dig into the performance and the outlook for each part of the business.
So let's pull back that curtain. If we look at the individual segments, where are the big moves? We know aerospace fasteners drove revenue.
Right.
Can you kind of break that down? Was it just general demand, or was there something specific, like new products maybe?
Good question. Yeah, the strength there wasn't just, the overall market. It actually included contributions from two brand new aerospace fastener components.
Oh, interesting.
Yeah, ones they just designed and qualified last year in 2024. So you're seeing that R&D effort turning into real sales now.
Right, paying off.
But on the flip side, electronics revenue was weaker compared to Q1 last year, which, they pointed out had unusually high levels of electronics business back then.
Right. So a tough comparison year over year. And that weaker electronics number, that must be the main reason for the year-over-year dip in EBITDA then.
Exactly. That sequential increase in adjusted EBITDA from Q4, that was mostly operating leverage. Good mix, high throughput on those fasteners. As they make more of those high-margin parts, the fixed costs get spread out, boosts profitability.
Makes sense.
But the year-over-year decrease from Q1 24, that's pretty much a direct result of less contribution from electronics.
Okay.
What was kind of notable, though, was management saying all company locations chipped in positively to EBITDA for the quarter.
Oh, okay. So broad operational efficiency, not just one star segment carrying the weight.
Seems like it.
And going back to cash management for a sec, that $3.1 million cash, zero debt, that $2 million increase year over year is, it's significant. They mentioned positive free cash flow, even with a little bit of CapEx, like $14,000 for manufacturing improvements.
It's just minor stuff.
Yeah, minor stuff. And they expect to stay cash flow positive all year. That really speaks to, managing working capital well, getting paid.
Absolutely. Okay, so shifting from the financials, what about the outlook for the business segments? Aerospace fasteners sounds like the star right now.
Yeah, the outlook there looks really strong. It's backed by a firm order backlog that goes all the way out to the end of 2025.
Wow, okay. That's serious visibility.
Right. Plus, they're seeing good signals for near-term spot buys, too. And management clarified those two new design wins from 2024. They expect those to be ongoing orders.
Not just one-offs.
No, becoming part of their legacy portfolio. That predictability is, pretty key for investors, I think.
Yeah, absolutely. Any mention of potential headwinds there? Or does that backlog sound pretty solid?
It sounded quite firm from the call.
Okay. What about aerospace casting components?
They're projecting single-digit percentage higher increases in demand. Kind of modest. But what's interesting is the strategy. They're focusing on streamlining the portfolio, keeping the components with better margins, adjusting prices, focusing on manufacturing efficiency.
So prioritizing margin over just chasing big revenue growth in that segment.
Exactly. It seems like a very disciplined approach to profitability there.
Okay, that makes sense. And then there's the electronics segment. Tempered revenue and bookings in Q1, you said.
Yeah, a bit soft currently. But management sounded pretty optimistic. They expect significant reorders for some missile defense-related microelectronic sensor components.
Reorders. Okay.
Plus, there's a new electronic system modernization switch component for naval missile defense stuff that seems to be coming online.
So even though Q1 was soft, it sounds like there could be a potential, inflection point coming for electronics.
It really does feel that way. This might be where the future growth story really kicks in.
Absolutely. And speaking of electronics, let's talk about that recent acquisition, Electronic Components Inc., or eComp. Now, on the surface, it's an electronics distribution business. But the strategic value seems, a lot deeper than just that.
How so?
Well, they have really strong relationships with the big defense primes. We're talking General Dynamics, Lockheed, Raytheon.
Okay, so key relationships. It's not just buying a distributor off the shelf then. What's the clever part of this strategy?
Right. So what seems really insightful is how Omni-Lite might be using this. eComp's main thing is finding those hard-to-source components for defense contractors. Parts that are obsolete, maybe the original supplier disappeared, that kind of stuff.
Okay, a niche need.
The niche need, yeah. And its margin profile is apparently similar to Omni-Lite's existing electronics OEM business.
Oh, okay.
So the strategy seems to be use eComp's relationships, that foot in the door, to introduce new product designs that Omni-Lite can make and sell as an OEM.
I see. So eComp finds the need, Omni-Lite fills it with their own manufactured solution.
Exactly. It's kind of a dual win. It's a distribution channel, sure, but it's also potentially a funnel for their own manufacturing. A Trojan horse, almost.
Huh. That's pretty hard. So they get a direct channel for their own goods into these crimes.
And management said they're actively working to expand eComp's footprint, looking for more of these niche electronics needs, especially for upgrading older defense systems.
Right. And wasn't eComp already a customer of Omni-Lite's?
Yeah, that's another key point. They were a prior customer, and apparently there's already joint work happening on several major programs.
Oh, wow.
And they expect at least one of those to materialize sometime in 2025.
So there's a pre-existing relationship, maybe some pipeline already built. That should help lower the integration risk, shouldn't it?
You'd certainly think so, yeah. So if you kind of connect all these dots, Omni-Lite looks like a company with a really solid balance sheet, strong cash, no debt, and they're strategically navigating these different segments.
Right. The aerospace fastener business is clearly humming along. Good visibility into 2025.
Definitely the current engine.
And then the electronics segment, yeah, it's a bit tempered now, but there's significant potential there. Reorders, new designs, and especially with this eComp acquisition aimed right at capitalizing on those defense trends.
And don't forget the casting components focus margin expansion over pure growth, shows discipline across the board.
It really does. This also brings up that point about, the long cycles in aerospace and defense.
Yeah, those qualification and production timelines, 6 to 18 months, sometimes longer.
Right. It's like you plant the seeds way before you see the harvest. These recent design wins, like in fasteners, really show that payoff from development work done, last year or even before.
Exactly. It demonstrates that patient, long-term approach you need in this industry. It's easy to forget that when you're just looking quarter to quarter.
Really hammers that home, doesn't it? It's about strategic foresight, not just quarterly sprints. It's also probably worth mentioning management's cautionary notes. They talked about the general economy, tariffs, the DoD budget.
Yeah, they did sprinkle some caution in there. While their own house seems in order, they're clearly aware of potential external factors.
What were the main concerns?
Well, just that broader economic trends could, dampen customer demand eventually. Tariffs, while maybe not a huge immediate issue, are always a background risk for costs. And the DoD budget, you know how that goes. Appropriation cycles, shifting priorities, that could influence future contracts down the line, even though the current backlog looks strong.
Right. So just keeping an eye on the wider environment, a balanced view.
Exactly.
Okay. So let's shift gears to our This Is Not Financial Advice segment.
Right. Purely informational, folks. Entertainment purposes only.
Absolutely. We're not recommending anything, just exploring how someone might look at Omni-Lite's situation.
Okay. So given that strong cash position, zero debt, and this potentially very strategic e-comp acquisition, for someone with, let's say, a higher risk tolerance, betting on a catalyst the market hasn't fully priced in yet, there's maybe a speculative idea brewing.
Okay, lay it on us. What's the thinking?
Well, the core idea is that the market might be underappreciating the potential synergy from e-comp. You know, how quickly they can turn those relationships into actual Omni-Lite OEM design wins.
Right.
So one could think about a speculative long position, maybe using something like out-of-the-money, long-dated call options, say 12 to 18 months out.
Okay, a longer-term bet. What's the specific thesis?
The thesis hinges on, well, a couple of things happening faster or bigger than expected. One, an acceleration of those significant reorders they talked about in electronics for missile defense. And two, maybe those joint programs they have with e-comp materializing faster or being larger than anticipated.
So basically betting on the electronics segment, surprising to the upside, fueled by the acquisition.
Pretty much. The outrageous part, if you want to call it that, is betting that maybe some external catalyst hits like a big new defense contract award, or maybe the Navy decides to accelerate upgrades on older ships.
Something unexpected.
Yeah, something unexpected that really juices demand for the stuff Omni-Lite makes via e-comp, leading to an earnings surprise that wasn't reflected in that kind of Q1 electronics number.
Okay, so it's a play on leveraging that current balance sheet strength and the acquisition into future upside that maybe isn't obvious today.
Exactly. Betting that the e-comp integration really is a game changer and faster than people think.
Got it. Okay, so let's just recap the main points. Omni-Lite Industries showed really strong financial discipline in Q1 2025. Lots more cash, no debt.
Very solid foundation.
They've got a robust aerospace fastener business with a great backlog giving them visibility.
The current powerhouse.
And then there's this strategic e-comp acquisition aimed squarely at unlocking, potentially significant growth in that specialized defense electronics market, even though that segment looked a bit tempered this quarter.
Right, connecting the present strength to future potential.
As always, we have to remind everyone to consider the forward-looking statements, the risks inherent in aerospace and defense.
Absolutely. Things take time. Policies change.
But as Omni-Lite works on leveraging this acquisition and keeps focusing on margins, here's maybe a final thought for you, the listener, to mull over. What's the real long-term impact going to be on their position in these critical defense supply chains? And maybe more importantly, how will realizing those expected significant reorders in electronics fundamentally change their revenue mix, their profitability profile over the next, say, year or so?
Yeah, that's the multi-million-dollar question, isn't it? How does this transformation play out?
Something to think about as you do your own deep dive. Thanks for joining us on TalkTickers.
We'll catch you on the next call.